So good morning, everybody. My name is Danny Fitzgerald. I'm the Regional Director for the San Diego and Imperial Small Business Development Center Network, and we're excited to have our Connecting with Capital panel today. Appreciate everybody for getting on, and in particular, appreciate our panelists, as always, for being here, as well as our sponsors. So certainly we want to be able to thank Fernando from Primary Funding, Andrew from Marble Bridge, DeWitt from Pacific Premier, Melissa from Wells Fargo, Robert from Banner Bank, Pete from Lendspark, and Melba from Accessity, who will be our panelists today. We'll also have a special presentation from our primary partner, which is the U.S. Small Business Administration. They're the ones who basically create our charter and our existence as the Small Business Development Center, providing no-cost one-on-one business assistance, helping folks access capital. Oh yes, Miriam, I forgot you, Miriam. Miriam from CDC Small Business Finance. It's because she's kind of tagged me in between her computer and her phone. So I apologize, Miriam. I can never forget Miriam. And so really appreciate you absolutely for being on today. And we're going to kind of go through things a little bit. We're going to start off actually with the Small Business Administration, with everything that they do, and I know that they have a couple of particular updates. So I'm going to bring, because they emailed me their presentation, and I'll let the fantastic Jamie be able to present. Give me 1 second. I'll share my screen and take it away, Miss Jamie.
Great. Thank you, everybody. Honored to be here. My name is Jamye Pritchett Solorzano, and I'm an Economic Development Specialist and Admin Officer at the United States Small Business Administration, San Diego District Office. And I want to give a quick shout out to my new colleague, Lucy Montgomery. She's also on the line with us today. And we're going to go through a quick PowerPoint on the Economic Injury Disaster Loan. Thank you, Lynn, for the slides. Okay, so we're going to do an overview of the COVID-19 Economic Injury Disaster Loan. We call it EIDL. And so what is an Economic Injury Disaster Loan? So the product, it's a loan directly from SBA that must be repaid, low interest, fixed rate, long-term loan to help overcome the effects of the pandemic by providing working capital to meet operating expenses. Okay, so we're going to also talk about the application process, and if I'm a borrower looking for a loan, where would I apply and what does that look like? We're going to quickly talk about some of the terms, and then we're also going to talk about whether it's a new application or maybe you've already secured an economic injury disaster loan and you're looking for additional capital. How do you request that? Because those processes are different and we want to make sure we share that information. And we're going to, of course, talk about some application details, the timeline, which is really important because our timeline is coming up, and then also requests for assistance and how we can help you with pending applications and how the SPDC works with us on those applications. So first thing, Economic Injury Disaster Loan application for first-time borrowers. An application is going to be submitted electronically online on SBA.gov. So if I'm a new borrower, I am actually going to go to effectuate that application on SBA.gov online. And of course, if you need assistance, you can contact us or contact the Small Business Development Center. Okay. So let's talk about some of the terms because they did change recently. So the interest rate for small business is 3.75. For nonprofit, this loan is available for certain nonprofits as well, and that interest rate is 2.75. The repayment period up to 30 years. So what is that, 2051? Yeah, so it's awesome. There's a deferment, a 24-month deferment for loans. And we have it broken down into 3 categories. So $1,000 to $25,000 loans. No collaterals required. And I annotated the credit scores. So each application is going to take into account the specific small business information, and 570 for the credit score. on the loans from 1,000 to 25,000, and then also on the loans up to 500,000. So when we move to this offering, so the loans recently increased, the loan amount increased from 500,000 to 2 million. So that's awesome. The credit score is higher on that, and there is a personal guarantee required when you're in the mid-range, the 25,000 to the 2 million. So let's talk about the awesome things that happened. So the use, what can you use the loan for? This was expanded. Normal operating expenses, working capital, payroll, rent, inventory, commercial debt. See that, what is it? The fourth bullet down, commercial debt, and also some federal debt. So the terms were expanded recently, and it really does provide awesome working capital for your small business and flexibility. Okay, so this is where I want to be very specific. So if you're a new applicant, a new borrower, and you're going to pursue an economic injury disaster loan, then like I said previously, you're going to apply online. And what's awesome about SBA.gov, and hopefully we can include the frequently asked questions in the chat, there is a list of frequently asked questions that are available. This is a multi-page document. And if you have a question about the loan, you can reference the frequently asked questions, EIDL, available on SBA.gov, or also reach out to your resource partner or reach out to the SBA. And so once you take a look at the frequently asked questions and you think you're potentially eligible, then I encourage you to submit an application. So you're going to submit that application online, SBA.gov. And so this is for new applications. But if you're in the scenario where you've already applied for an economic injury disaster loan and you're pursuing an increase, so I already have a loan, say my loan is $500,000. I need additional working capital, and I need to go back to the SBA and make a request for additional capital, So what that's going to look like is loan borrowers have what we call a portal. So this is where the applications are processed. So if you already have an application in play, then you're going to go to that loan portal. It's really important to not apply for another loan. You're going to go back to your portal, verify the information, log on to your portal, and within the portal, there'll be a section there for users, and it'll say request an increase. So if you have an existing loan, the process is to go into your portal and request an increase. If this is a new loan, then you're going to apply online on SBA.gov. Really important to not create multiple applications. Okay, thank you, Lynn. Okay, so this is our last slide, and I want to express taking advantage of the opportunity while it's open. For example, the timelines below assume the applicant responds quickly to what the SBA requests. So oftentimes there's some follow-up documents. We're going to talk about the documents that are required. And here are some average processing timelines, but we're not going to wait for those. If we're going to engage in the process, it's important that you make a decision and apply quickly. So for example, on that third COVID EIDL application for loans over 500,000, the SBA is saying the average processing time is 9 weeks. We're currently almost in November. So November and December is 8 weeks. And right now the application process for economic injury disaster loan is through December 31st. So no time to waste on whether or not you're interested in the application. If you think you may have interest, I suggest people apply. And at any time in the process, if they decide they're not interested in the loan, or if they want to repay the loan, there's no penalties, but at least that will position you to be in a position where your application is in play. And as everybody knows, SBA is processing millions of applications. Okay, so for required documents, in addition to the application that's online, what they're going to do, the SBA, when they're processing it, they're going to be looking at your federal income tax return. So it's really important that your taxes, if you're going to apply, that you've actually filed your taxes and completed your taxes with the IRS, the Internal Revenue Service. So for example, there are some folks that were behind in their, or I don't want to say behind, the IRS gave everybody some extensions. So you want to make sure that your 2019 federal income tax returns are complete and filed with the IRS. And then there's also a standard form that's used for all of these loans. And it's a form from the IRS. It's an IRS form. It's called a 4506T. And what that form is that's a form to allow the SBA to access your data with the IRS. Depending on the size of the loan or whether or not it's a loan modification, there's some additional forms for loans over 500,000, and they're listed on the right. All of them are available on SBA.gov. And another thing, the SPDC is terrific about helping small businesses to complete any of these forms. For example, the schedule of liabilities, they're there for you, and they've helped a tremendous amount of small businesses and nonprofits in San Diego to get those forms. Not everybody is familiar with completing applications, and so they're a valuable resource. And then lastly, I wanted to just mention for any folks that have already applied and they're in the process, or the SBA has requested information and they're trying to submit the information, we are there to help with any pending applications, reconsiderations, and the SPDC, we meet weekly. So bring in your concerns. If you're stuck in the process somewhere, we want to get you unstuck, and we want to do it quickly. So if you're unsure, you need to be moving forward, and please do not hesitate to reach out to the Small Business Development Center or to the San Diego District Office. And Lucy and I will work with our SBA colleagues and the SPDC, Danny and Lynn and their terrific staff to deliver service and get it moving in the right direction. And then, Lucy, did you want to add anything? I know that was really quick.
Was a pretty good job, Jamie. Just know that there's increases, and do know that the application deadline is December 31st. So this is fairly new that they have a deadline on the EIDL loans for COVID, but December 31st.
Danny, thank you again for everything. We really appreciate it. And again, everybody on the line, we appreciate, I know everybody has cross-supported all the small business community throughout the rollout of all of these programs. And I've worked one-on-one with many of you, and we do this together, and we appreciate your support. And if we can help you in any way, please reach out to us.
Fantastic. Thank you very much, Jamie. And I do see the question there. Yeah, I can certainly send out that presentation when I send out the recording of this as well. So do appreciate Jamie and Lucy for getting on. The EIDL program really has been critical. I know many businesses that I personally have spoken to, and I know our advisors speak to. It's certainly beneficial to them, and it really does, really is creating a critical relief for many different businesses. So do want to now move on to our panel. And again, really do appreciate everybody for being on today. I also want to be able to thank the sponsors of our Connecting with Capital, which include some of the folks that are on the panel, such as we have Lendspark, CDC Small Business Finance, we as Pacific Premier, Primary Funding, Marble Bridge Funding, that are all of our sponsors. Wells Fargo supports the SPDC. Also, those that aren't on include Home Street Bank, Main Street Launch, and so certainly want to and United Midwest Savings, and certainly want to be able to thank them as well. So we're going to start off and just with kind of the straightforward and simple question here, which is just introduce yourself and your organization, and we'll kind of take it from there. Why don't we go ahead and start with you this morning, Pete?
Hey, thanks for having me, everybody. Thanks, SPDC. My name's Pete Deegan. I'm with Lenspark. We're up here in Carlsbad area. And quite simply, we help small businesses get the financing we need, such as working capital and equipment financing, when they may not be in the best standing with their bank for many different reasons, credit, otherwise. And we kind of help bridge the gap and get them back into good standing with their bank. I've been here for about 4 years now, and we can lend in all 50 states. Happy to be here.
Thanks, Pete. Appreciate that. Robert, why don't we go to you from Banner Bank?
Yeah, hi, nice to meet everyone. I'm with Banner Bank in Point Loma, and we're a bank that's been around for 130 years that specializes in, and I guess what you'd want to say, more of a customized service. We're able to serve small businesses. Typically, we like to look for a small business that's been in business for a couple of years. Credit scores in the upper sixes, and we've got a variety of different products. We've got a really nice product that's called Quick Step, which you can do with minimal amount of paperwork, and you can do up to 100,000 stated income. So that's really good for borrowers that aren't overly savvy or don't have a lot of sophisticated financials, and it works out really well with us, and very minimal fees. So I'm happy to be here, and some of you look familiar, so it's nice to see you.
Thank you, Robert. Why don't we move on to you, Andrew?
Thank you, Daniel, and thank you, SPDC. I'm Andrew Crone, Senior VP, Marble Bridge Funding Group. We're in the Northern California area. We are a commercial finance company, been around 24 years. At this over 21 years now, and we provide accounts receivable financing, purchase order and contract financing for those businesses that provide a product or a service to another business. We work with startups, and we can provide up to $5 million a month and get it done in a week. That's it.
Thanks, Andrew. What about you, Melissa from Wells Fargo?
Hi, Danny. Good morning. Thank you. So I am Melissa with Wells Fargo, and I am out of our San Diego area, but I'm able to support across the country. We can assist clients with unsecured financing up to $150,000. We're able to do special financing for our healthcare division, so doctors, and we can also do conventional financing for our clients who are looking to finance investor property or owner user properties, as well as equity lines and equity loans. And then of course, we can do SBA financing 7A 504. So been around for about 16 years, and thank you so much for having me.
Thanks, Melissa. And what about you, Miriam from CDC?
Hi, so my name is Miriam, and I've been with CDC almost 4 years. I've been in the industry for 18 years. I'm aging myself. But yeah, CDC is a nonprofit lender. We have been around for 40 plus years. We have an awesome relationship with you guys at the Small Business Development. We use you all the time, weekly basis. And, you know, our purpose is really to help people that are not yet bankable. So we want to be able to offer affordable rates in terms to start up businesses, acquisitions, you know, African-American, Hispanic business owners, businesses that are located in low or moderate income areas. Those are our target businesses. That being said, we'll help anybody who's a startup. About 50% of our loans are startups. And the way that we're able to help is we have, the same SBA guarantee as big banks do. However, our underwriting is a little bit different, and we don't have a ton of guidelines other than, hitting our minimum credit score requirement of 620. And really just being able to cash flow. Other than that, we are open to hearing your story and understanding where you're coming from and seeing if it makes sense that your business has the ability to repay the debt that you're asking for, so the loan request. So that's what we're about. We do loans from 20 to 250,000 for, like I said, working capital, tenant improvements, acquisitions, startups, existing businesses. But that's kind of us in a nutshell.
Thanks, Miriam. And DeWitt from Pacific Premier.
Thanks, Danny. I'm DeWitt from Pacific Premier Bank. I've been with the bank for 6 years. I'm the first vice president of commercial banking, and we specialize in business and real estate lending from 60 different branch locations in the Western region. So every major market in California, Arizona, Nevada, the Pacific Northwest. We do all different loan types from SBA lending, state guaranteed loans, conventional loans, real estate loans. Loan sizes go from as small as $5,000 all the way north of $100 million. We have a program where we can do $5,000 to $25,000 on a line of credit or a term loan with a one-page application. No additional documents are needed. And with that, a business would need a 12-month track record and a minimum credit score of 615. We also have a program that goes from $50,000 up to $250,000, same two-page application. And then we would also look at the most recent filed business tax return, year-to-date financials. And then we also have programs that go above $250,000 that are fully underwritten, which means 2 to 3 years of taxes, financials, personal financial statement. We don't really lend to startups until they have at least a 12-month track record. But once a business has been around for 12 months, we really have a product or solution to fit every kind of life stage of that business.
Fantastic. Thanks, DeWitt. And why don't we go to Fernando from Primary Funding.
Thanks, Danny. Fernando Ponce with Primary Funding. So we're a San Diego-based, asset-based lender. We've been in San Diego for about 27 years now. We do lend around the country. So though we're in San Diego, we'll lend pretty much anywhere in the U.S. We tend to focus on deals that are, either not quite bankable, or maybe we're just, had some issues in the past year or two and are unable to maintain a banking relationship. And we really just focus on leveraging those assets. So, and what I mean by that is accounts receivable, purchase orders. We'll take real estate as collateral as well. We just try to get creative and make it work. And our ultimate goal is to work with you to get you back to bankability. So we partner with a lot of the individuals on the call here today, and we'll work on helping you get your business back up and running in conjunction with the SPDC, by the way, and hopefully get you back to bankability within 18 to 24 months.
Fantastic. Thanks, Fernando. And last but not least, Melba from Accessity.
Hello, all. This is Mel from Accessity. Happy Friday. So I am with Accessity, which was formerly Acción San Diego. We primarily try to fund startups and businesses that are owned by women, minorities, vets. We can lend up to 100,000. Turnaround time right now is about 3 weeks. We don't have a minimum FICO score. We try to work with everyone. Our focus right now is really helping those businesses that fall just short of the banking requirements, either if time in business or gross sales for a year. Try to help everyone we can. We are pretty flexible, and yeah, we right now are lending in the counties of San Diego, Imperial Valley, Riverside, San Bernardino, and early next year we'll be moving into Orange County and LA. That's it. Thank you.
Thanks, Melba. So yeah, so you can see it's a diverse set of lenders. And I think that's really the purpose of what we do with Connecting with Capital. Because at the Small Business Development Center, as kind of you've heard, is we work with everybody. And because we're not a lender, we're here to assist you, be able to help you navigate the lending process, understand what works best for you as the lender. And then of course, there's so many different types of lending options out there. And I think that's really the number one intent of this of these panels that we have, is to really kind of get to know the lending landscape and things like that. So I'm going to kind of ask a little bit of a different type of question here for folks, because I know, as you know, obviously the last 18 months, as evidence with everything that certainly Jamie talked about, how we're having with the economic injury disaster loan, it has certainly changed a lot of underwriting process and application processes, and and then kind of moving into 2022. And so so I think that's kind of more the question I'm going to ask everybody is now that business is pretty much back to business as normal, I guess, as normal as ever going to get. What is kind of you're looking at from small businesses, and what you kind of see as the lending landscape going forward here for 2022? And why don't we go ahead and start with Miriam?
So what we're seeing at CDC right now are a lot of acquisitions. So some business owners that had strong businesses that have been around for a long time. I think COVID just made them feel that they just kind of want to exit. And of course, there's a lot of people that are excited to be business owners. So I've actually experienced a lot of great, situations that we've been able to help small business owners. For example, this was actually a referral from you guys that also went to the Business Women's Center. And the borrower worked with both of you, and then the referral was sent to me. And this client had worked at a postal annex her whole life for 13 plus years. She had an unfortunate situation in 2020, COVID, and her life circumstances changed with her partner, and she had to become the primary income provider in her home. And she had always dreamt of owning this postal annex. And we were able to help her purchase the postal annex with a lot of help from SPDC, honestly, and the Women's Center with her projections and her business plans. So in all honesty, we, as far as in our guidelines, they haven't changed much since we loosened them up, maybe at the end of 2020. But what I have been seeing is just a lot of acquisitions and a lot of startups, which is, something that we've always offered, startups and acquisitions, just a lot more right now. So as far as in what I see, I do see that my banking partners are able to do more. So I do anticipate that by 2022, our guidelines will become a little bit more loose, not too much. So that's exciting. We've been continuing to help a lot of clients, and it's really heartfelt to see a lot of stories like the one I just shared, to see people's dreams come true, and to be a part of that at CDC by allowing these small business owners to, acquire a business that they've always dreamt of acquiring.
That's fantastic. Really appreciate that, Miriam. I know that's the type of partnership we look towards. All right, so DeWitt, I know you have a crystal ball there in that office, so and kind of as to what's happening as well right now. So what about for you? What are you kind of seeing, and what are some of the changes at Pacific Premier kind of post-pandemic?
Yeah, thank you, Danny. So changes post-pandemic, really all of the changes that I've seen have been positive ones. We've cut interest rates a lot. We've increased the maximum loan to values on a number of different loan types, from construction lending, which prior to the pandemic, the maximum loan to value might have been 60-65%. Currently, max LTV on construction loans is 80%. Same with other types of real estate. So going into 2022, we're very bullish on the economy, especially the local economy. Stuff that we've seen over the past year, I've been doing a lot of equipment financing. So, some companies have done pretty well during COVID and made more money. And what do they do with all of that profit, or how can they maybe engage in tax planning to minimize their profit? well, they could sell old equipment and buy new equipment. So we've been doing a lot of equipment financing. Same with inventory. It seems like throughout COVID, we've heard lots about supply chains, shortages, and lots of businesses are trying to keep more inventory on hand to keep up with demand. So I've been also doing a lot of inventory financing, lots of lines of credit to help businesses expand, and lots of investors that are also looking to secure lines of credit against real estate, given the lofty values of real estate locally. And we've also seen a fair number of businesses that are looking to buy real estate. So these are business owners that maybe prior to the pandemic were on a lease, and now they want to buy their own building. We've seen a lot of that as well. So next year, we're really optimistic that we're going to continue to see business growth go up and see lots of new lending activity.
Fantastic. Thanks, DeWitt. And Andrew, I know you've been doing a lot of lending during the pandemic in a variety of ways. And how have you kind of seen that change, and what do you think is going to kind of stick and continue into 2022?
So at our end, we have definitely seen an increase in the last 6 months of demand for funding. A lot of the businesses, almost everyone we've touched, have had PPP, have had EIDL loans. Some of them have had second EIDL loans. And so what that's enabled them to do is sort of survive over the last year and a half. I would say without those, a lot of those businesses would have had a lot of problems. And now they've gotten to the point where their business is back or expanding, doors are open, as you would say. And now they're looking for even more working capital. And so with that being said, we are seeing a lot of businesses come back in. Our businesses that we are funding are expanding again, which is good. So everything's good at that end. We are seeing, and we haven't changed our underwriting at all, but we are up significantly for this year as compared to last year, which was a tough year, I think, for most lenders as a whole. What I am seeing in the marketplace, quite fascinating, I am seeing inflation. And I'm seeing it at a lot of different types of companies, especially those who are importing products from overseas. The container prices are up 5 times. Their prices are going up. They're getting their inventory is slowing down. So they're losing inventory as far as they're having it in stock. And that's starting to create some stress on some of the businesses that are coming our way. And so businesses have to have additional working capital and try to increase their inventory needs, carry more inventory than they normally would, which obviously is creating a cash flow crunch with them. And so we're trying to help out those businesses on that end. So on one hand, you have business coming back. On the other hand, a lot of the businesses that are related to bringing in product from overseas are starting to get distressed. And then I'm hearing within the logistics industry as well that the increases in gasoline and other things are having some negative effects on margins, which down the road may create some problems for business. So there's good things and there's bad things that are happening. But I would say overall, from our end, we're up. We're seeing a lot of business. We're working with the SPDCs. We're getting referrals. We're getting things done. And it's, I would say, it's better now than it was a year ago where we were all at. And I'm seeing events where people are actually getting together again. So that's always nice to see as well. So I would say on the positive, we're headed in the right direction, but there are some headwinds out there that we're all going to have to deal with.
Well, thanks, Andrew. And Melissa, there at Wells Fargo, obviously is a large institution. I know you all did a ton of work around PPP and have probably worked a lot in the forgiveness. And I know there's been a lot of changes, I'm sure, there at Wells Fargo too. So what are you kind of seeing coming up for 22?
Well, we have been fairly busy with PPP. Thankfully, Wells Fargo has a special group now that is focused on just handling the PPP. So our staffing is now, back up to par for underwriting, and we're really able now to focus on customers' requests opposed to before. That was a bit of a challenge, having to pull people from different departments to work both angles. So we are moving in the right direction as it comes down to the way that we're operating. I will say for, what we're seeing a lot of right now is acquisitions. And with that, some of our clients were assisting with like exit strategies to prepare them to exit their practice or their business here in the next 2 to 3 years. I'm doing a good amount of refis for investment properties right now. Really taking advantage of the low rates for some of our investors. Lines of credits for working capital. That is something that is quite big right now. Real estate. So expanding customers who are looking to purchase commercial real estate to either open second location or, they're tired of leasing at this time. That has been a very hot topic. I say what has been top of mind for a good amount of my clients is staffing, the challenges with hiring more people or the turnover. That has been a pressing concern. In addition to the inventory, it's more often than not that I'm having conversations with clients about the Long Beach port and not being able to properly obtain their inventory. So all around though, I feel that things are moving in the right direction. Our guidelines are, pre-COVID guidelines, essentially the products that we were offering before, they're all back accessible. Our commercial equity loans are definitely one of the ones that I was very excited to have back, which was one of the first products to go away when things started to, when COVID took over. So happy to see that, we're moving back into the right direction here. So thank you, Danny.
Thank you very much, Melissa. It's good to see kind of some of that stuff coming back. And I think that's a lot of what we're seeing coming forward with 22 is so much of that return to some of that, but also a lot of the lessons learned in turning that into a positive. And Pete, I know you all were doing a lot of lending. I mean, especially with your specialized equipment financing and such. And so some of that, what you've done and how is that going to impact, you think, going forward with 22?
Yeah, I mean, our style of underwriting almost, I wouldn't say completely changed, but in some ways your 2020, 2019 tax return just doesn't really tell me what your business is about today because, I mean, it was a different world back then, right? So we really wanted to see how businesses have adapted, how they've got creative in some ways. One of the best examples, we're actually working on a transaction right now for a customer up in the Fresno area. They were, I would say, a restaurant and a wholesale meadery. And obviously with COVID and the restaurant portion of the business not able to function quite as efficiently, they really leaned into this wholesale market because people were cooking at home and they wanted access to this, more quality cut that maybe they couldn't get elsewhere, specialty. Fast forward, it's completely changed their business. They are now almost entirely wholesale with a little bit of a side restaurant thing going on. And we are working on a $400,000 giant 50,000 square foot walk-in freezer facility, USDA grade, I mean, the works, and like quite literally completely different business model. So that really is, we're getting a story from them. Tax return just shows me what the ownership looks like, but I mean, it's a completely different business now. We get on the phone, we talk, he's telling me all these exciting new things that are happening. So that's the style of underwriting. Although I would say restaurants in general, bars are still a little bit of challenge for us. That's the one industry that just because cities and, all over the country are changing, so rapidly and so fluidly that's the one industry where we're still a little bit tough to lend in. But like I said, if you have pivoted in another direction, I mean, that's exactly what we're looking for.
Fantastic. Thanks, Pete. That's good to see kind of the different changes that are happening, certainly with the industry. And Melba, there at Accessity, what are some of the things that I know you've been obviously very active in a lot of emergency lending as well, but certainly I know there's been some important changes at Accessity too.
There have. We are, aside from offering our regular, rapid loan and small business loan product, we have been trying to get out the COVID relief loan. There's been a definite change to the people that are applying. A lot of it has turned into, companies that are coming or trying to get into logistics, food trucks. With that being said, we're seeing an uptick in fraud applications. And so we're having to look a little bit closer to some of the income documentation that's being sent in. It's unfortunate because we do want to try to help people, and we're finding that, they're maybe just so desperate that they want to keep their business going or get something else, up and running, that they're trying to do whatever they can to qualify. So those are the changes that we've been seeing. Again, it's not going to stop us from lending. Obviously, it just means we have to lend more critical eye to documentation that's being sent in and trying to weed through the riffraff and get to these people to help them with the funding that they need. So
Awesome. Thank you. And Robert, what about there at Banner Bank? I know as a more local community bank, you've been doing some different things as well.
Yeah, it's really an interesting time. All the banks are flush with money, and it's just sitting, on their balance sheets, and so we want to lend it out. And so while we want to lend it out, we still want to be prudent in our underwriting. So our underwriting policies really haven't changed, but some of the programs have, as a few other people alluded to. Interest rates are a little bit more favorable. The types of products that we've got have been tweaked a little bit in terms of maybe term and so forth. So we've last year in 2020 and so far this year, we've had exceptional lending. Record lending in this particular office in Point Loma. And it's an interesting thing because you would have thought that it would have been just the opposite. But we've had a lot of requests. I would say we've got about a 90% hit rate in terms of approvals. The one thing that is changing, and everyone has mentioned that, is the fact that the way business is done now is changing. Businesses, for instance, will use our particular office. A lot of people didn't come in as often. So there's now different ways of banking through electronic banking and so forth that people are taking advantage of. So I think a lot of the businesses are realizing that the way of doing business before doesn't have to be the way going forward. So I don't think there's a lot of need for offices like there was before. A lot of people are working from home. And that creates a whole different set of credit needs as well. So it's an interesting time. I think 2022 is going to be great. I think that we're going to finish off this year really well. So I think things are fairly positive if everything stays the way it is and gets better.
Fantastic. And Fernando, I know primary funding, you've been lending quite a bit as well. And I'm sure that there's things that have changed that are going to also drive what's going to happen in 22 for you all.
Yeah, I think, to echo what some of my peers here have said, the biggest thing that we've been focusing on is a lot of businesses now with the amount of capital that's in the market. And, some businesses had the ability to hang on and are now starting to flourish because of that, right? I mean, and those that hung on, they really refined their business practices and really, kind of tightened things down, made sure that their expenses were in line. And are in our position, they're kind of at an inflection point now where they're able to really, kind of trampoline off of that and go with this surging, with this economy that's trying to surge back. So the issues we've been seeing that we're really, focusing on is, the supply chain. It's been a big deal. A lot of the companies that we're working with are having to really buy ahead, right? They're buying. I work with a company that manufactures a food product, and they're having to buy like all their artificial sweeteners in bulk months ahead just to have it there so that they can actually continue to produce at the level that they're being asked to. So that's putting a huge financial strain on them. And then the hiring piece is huge. I mean, we work with several staffing companies and they can't find people, and the ones that they find are very inexperienced. So there's a huge ramp up, to that. So that's capital intensive as well. So those are huge factors that we're focusing on when we underwrite to make sure that as a business owner, you have a good understanding of that. We don't expect you necessarily to have all those answers, but at least you understand that these are issues for you. And how are you going to mitigate those? If we provide capital, are you just throwing money at it to try and fix it, or do you actually have a plan? So I think it's important to have a plan on how you're going to execute with those dollars to make sure that they're actually being used appropriately to mitigate the issues that you're going to face with supply chain, with hiring ahead, with all those things.
Fantastic. Really appreciate that, Fernando. I think everyone, you can see there's a lot of optimism, but it's, but understanding the ever changing and how fluid the economy is right now. And it truly is, uncharted territory, but there is a lot of cause for optimism. And so knowing that kind of there is that cause for optimism, kind of what we'll do is, for our next question is really, since we have the small business owners, what are a couple of tips you would give them in terms of being, as they prepare for lending right now, in terms of what they're looking at for their business in kind of a go forward? Why don't we go ahead and start with you, Melissa?
Thank you. So I would say having a good plan, having a good business plan, really understanding, your request. So sometimes customers come and they know they need capital, but they're not quite sure what it's for or the dollar amount. So really having that understanding, having financials ready to go is really critical. Having current, profit and loss and balance sheets and so forth. And then if for whatever reason there was a change in the business, really being able to articulate that. Why did maybe revenues dip a little, or what have you done in order to be able to generate more business? If you had to pivot your business in a different direction, what does that look like? And is it going to, are you going to be able to sustain that? And if so, what is that going to happen? How is that going to, look for you? So I think all around is just really understanding your business. And if you do not, you have challenges, leveraging your resources like the SPDC. I think for all of us here, we're well connected. And so for whatever reason, Wells Fargo just doesn't make sense today. We'll leverage other folks within the industry to make sure that your needs are being addressed. But really understand that you have to plan ahead. And so, it's difficult to come to the bank and say, well, I need this tomorrow. It takes time, to go ahead and really be able to execute to the request.
Awesome. Thank you, Melissa. Andrew, what about a couple of tips from you?
Okay. So my latest conversations with small business revolve around a couple of things. I'm trying to help these people in small business get a better insight into their business. Very few of them seem to produce a monthly financial where they put it on a spreadsheet where they can compare all their P&Ls by month going over a year period, where they can see where expenses are creeping up or things are getting out of control. So I've been working on that with a lot of them to try to help them get better at planning for what happened in the past and where they are in the future, especially because of what happened in COVID and how they reacted to it. Secondly to that, I'm going to bring up inflation again, which is a hot topic you're seeing in the news. It doesn't look like it's transitory. It really looks like it's going to be here to stay, at least going into next year. So I'm running into customers who are taking on contracts. Well, if these contracts get delayed 3 months, 5 months, 6 months, the cost of their goods are going to go up dramatically, potentially, and they could take a beating on that contract and can have a negative effect. So I'm trying to get them to look at what's going on in the marketplace and look at their contracts and prepare them potentially with inflationary clauses to protect them. So if we're funding them, they don't end up in a tough situation 4 or 5 months later because they didn't plan on 5, 6, 7, 8% inflation. I mean, to me, it's amazing to walk into an In-N-Out Burger and see a sign offering to pay employees $22 an hour to flip burgers. It's just incredible, which leads back to what Fernando was saying about getting staffing. Very, very difficult in attracting people. And so wages are going up to try to find the people that are available in the marketplace. And the third piece of this is the people that I'm working with in my markets where I'm trying to get them to SPDC consultants on the finance side, because the biggest problem these businesses have, they don't really have access to somebody who can help them out. And the service is free and they should take advantage of it. So I push for that quite a lot. I have a new client down in the San Diego market that actually met me on one of these events that we're on right now. And I'm about ready to introduce them to an SPDC consultant to help them get to the next level, because they're the good people. They've been challenged a little bit up and down with this COVID thing, and now they're ready to get to the next level. We're going to join up with them, and I want the SPDC to be there by their side to help them, hopefully double their business over the next couple of years.
Well, fantastic. Thanks, Andrew. No, we're absolutely, we're here to help. And we have, 100+ advisors here in the San Diego and Imperial region to be able to certainly to assist these businesses. And what about you, Robert? What are some of the tips you've got?
Okay, so basically, I just had a conversation with a gentleman yesterday, and he didn't, as Andrew and Fernando were saying, he didn't have a lot of financials, so we had to basically lay out a roadmap of what he needed to provide any institution, whether it's Banner Bank or Wells Fargo or B of A, in order to get an application going. So what we did is we talked about where his business was, what he foresee, what he's foreseeing happening in the future, and what he would like to have happen in the future. He's in manufacturing. And again, getting supplies and having that lag time of when projects get finished and so forth. That's his main concern. Also, hiring the right people. There are people that want to come in that do not have any kind of experience in his particular field, but yet they are the only people that he's getting as applicants. So it's a balancing act for this man. So basically what he's going to do is he's going to pull back a little bit, not take on as many projects, and look at hiring the best people he can possibly find and then grow from there. So I think that you have to act as almost as an analyst for some of the borrowers, so that they're able to really feel comfortable with you and you can analyze what they need. And I think all of us here, the only thing that we were really interested in is trying to have people attain what their goals are with the least amount of stress. So yeah, so that's my big advice, is have all your ducks in a row, your financials, and figure out where you want to go.
Awesome. Thank you very much, Robert. And Pete, I bet I know what your tips are.
Yeah, I recycle the same ones, but actually, really tell us about the whole picture of everything, especially, dealing with Lensbar, because we are a little bit of a tailored lender, if you would. For instance, like if you have a rental property that you just got maybe, or something, maybe you own free and clear that we could leverage as a, collateral for a loan. Yeah, just give us the whole picture, even though if it might not have necessarily anything to do with your business. If we can just collateralize it, and if it's for business purpose, we're open to it. And get your online profile set up. Every lender Googles you, addresses, and when we see, oh, this doesn't add up to what's on your application, and phone numbers and this and that, and it takes maybe 10-15 minutes to go clean that up on your part, and it opens up a lot of can of worms when we have all these other questions when nothing matches up online. Thanks again for having us, SPDC. Thanks again, Danny. Appreciate it.
Fantastic. Thanks, Pete. And Fernando, what about you?
Yeah, echo what some of my colleagues here said, but it's really use the SPDC. You got to use these free services, because obviously there's a lot of lenders on this panel here today, and there's countless more that they work with that, they're going to be able to find a fit for you. Every referral that I've ever gotten from the SPDC has been a good fit, and we've been able to fund those clients because they already knew that they would be a good fit for us, right? So being prepared, being upfront, about the issues and addressing them as opposed to trying to hide them. We get that a lot, unfortunately, where people come and they try to, omit certain things that maybe don't look great. It's gonna come up, right? And then once it comes up, now it's a real issue because it's a character issue, not just something that we have to find a way to mitigate. And you can't really mitigate a character issue, unfortunately. So if you're prepared, if you're upfront with your advisors and you really put your best foot forward, that's going to be your best chance at saving time and getting the proper financing vehicle. Because if you do that, they're gonna tell you exactly where to go, exactly what to say, exactly what to have, and your success rate is going to be much higher, right? And that's what's important, is don't go to 5 or 6 or 10 different places to try to get funding. Go to one. They tell you exactly what's going to work, and then they send you to that one partner, and it works out. And you're going to save yourself a ton of time. And all this gray hair is from my kids and also clients that they aren't upfront with me, and I got to go dig through all the stuff to find out what the true story is.
Fantastic. Thank you very much, Fernando. I think I don't have it on the beard, but I got it up here. So I hear you on the gray hair. Absolutely. So how about you, Melba? What about you from Accessity? What are a couple of tips?
Pretty much echoing off what I've heard here. What very, very, very important is we want client to have an idea of what they're going to use the funding for, to really sit down and analyze, because they might throw out a number just without really thinking about it. So a detailed business plan helps, so that we can see their thought process of how they came up with that number, and what they plan to do with it. And financials, at the end of the day, it comes down to the financials, and seeing that correlate with a business plan, that for the amount that they're requesting, that it's well thought out. And I, just like everyone else says, the SPDC has been very key with a lot of our clients for getting help with those business plans and helping to think through the process of, okay, this is how much we would need, and this is the reason why we need it, and it's the purpose. So I definitely recommend, whether they're just starting out or already have been in business, reaching out and using, the resources out there. And SPDC, like I said, has been key, very key. Thank you. Thank you for having me today.
Thank you very much, Mel. What about you, DeWitt? Couple of tips.
Well, all the good tips are already gone, but the only one that I'll just add to it to add something different is just be responsive to your lender's requests. So if you call your lender today and your lender tells you, well, I need taxes and this and that, and you send one item the next day, and then your lender says, well, you still need to provide X, Y, and Z. Do your best to get everything that your lender is asking for as quickly as possible. Because typically the more time that goes by, the harder it's going to get for that lender to kind of pick your file back up, dive back into it, figure out where they left off, finish whatever analysis they're working on. And I know for myself and probably most of the lenders here, we want to fund your loan as quickly as possible. We don't want it to be a stressful process for anyone. We don't want it to take months going on months to fund your loan. We want to make it easy for you. And I think what would make it a better experience for most applicants is just be responsive. Send everything in, all at once. If your lender asks a question, has a document request, try to send that information in or respond as quickly as possible. And then the last tip that I would have is just know your business and know your numbers like inside and out. It's always funny to me when I ask a business owner, well, how's your business doing? What's your year-to-date net income? And they say, I don't know. I have to find out. And I'm thinking to myself, well, am I talking to the wrong person? Because you should probably know how your business is doing year to date. So be prepared to talk about your numbers with your lender or with the bank or whoever you're working with. So maybe before you talk to the bank, before you talk to the lender, maybe take a look at your financials, see, okay, here's where I'm at. I'm, making X amount of dollars year to date. This is what my net income was at the end of last year. Maybe this is what my current accounts receivables look like. Because your lender probably is going to ask those questions, maybe even on a first call. And the more information the sharper you are at knowing your numbers inside and out, it'll just instill more confidence to the lender. that, wow, this person really knows what they're talking about, I can put a lot of confidence and a lot of trust in the information that they're providing to me. You know, as opposed to a lender asks someone, well, you know, how's your business doing? I don't know. I should find out. You know, I don't. So just make sure you know your numbers before you talk to your lender. That's all for me, Danny.
Well, thank you very much, DeWitt. And we'll wrap up with Miriam.
I feel all the good stuff has already been spoken. But yeah, I mean, I would say this, the same thing that I say all the time that is always true for me is just for the advice I would give to a small business owner is to be honest. You know, there are so many hands, I can't even tell you how many hands and how many people review things besides myself and the underwriter. I mean, there's just so many hands that look at everything and so many pieces that everything is really looked at to in depth. So if you had a bankruptcy, you know, 10 years ago, we'll know about it. If you had a DUI, we'll know about it. I mean, we pretty much look at all of your personal and business information. So the best thing you can do is if you know something's, you know, not right, or you have an outstanding collection or whatever it might be, just, you know, be honest with myself or with banker or whoever you're talking to, because the more information that we have, you know, the less we're going to waste your time, our time, or we can, you know how to approach your application to, you know, state to our underwriter, you know, compensating factors for things that might not be, you know, positive in your application, which will only help you in the long run, you know, get an approval instead of a decline. So just be honest. We all work together. We all know each other on this panel. We all refer to each other. So, you know, it's okay if you're not a good fit for me, you might be a good fit for Accessity. And if you're not a good fit for Melissa at Wells Fargo, she might send you my way. So, you know, we all work together. We all partner together. We all love the SPDC. They've just been such a great partner and honestly help our deals get approved for our clients, which is what we want. So yeah, just be honest with, you know, whatever lender you're talking to, and we're all, you know, hoping to see you win, and we'll either, at least for myself, with my clients, it's never typically a no. It's okay, I have a better fit for you if I can't help you, or let me walk you through, you know, some of the items that are not allowing you to get approved. And then that allows you as a business owner to take action and then, you know, work with SPDC and come back and maybe get approved at a later time. So that's my advice.
Well, fantastic. There's so much great advice. And again, what we really do with this panel here at SPDC is really make sure you understand the lending landscape and that there's a lot of lending options for you. But the key is I think the overarching one is certainly to be prepared, understand where your business is at. And at SPDC, we're here to help you kind of get through that, take a deeper dive into your financials, and then make sure you're able to find what you need at that point in time of your business to be able to grow your business from a lending landscape. And so again, we appreciate Robert, Pete, Andrew, Fernando, Melissa, DeWitt, Miriam, and Melba, all for being on. Thanks earlier, of course, to Jamie and Lucy from the Small Business Administration. We really appreciate it. And we thank you all, and you all have a fantastic weekend and happy Halloween.
Happy Halloween. Thank you. Bye-bye.